Welcome to Everything Life and Financial Freedom. We are your hosts, Linda and Jim McKissack. If you know our story, you know that we went from over $600,000 in debt to having financial freedom. We share some of the insights and practical tips that we've learned over the last 30 years for achieving financial freedom, building wealth, and building an extraordinary life. Let's get started with today's episode. Thank you for being on here. We're ordinary people who decided we want an extraordinary life. And so what we try to find is other ordinary people who have done amazing things and decided to build an extraordinary life too. So I've heard you have a great story. And honestly, I'd love for you just to say you were born, then what happened, and you're so young, you don't even have to do the Cliff Note version.
That's exactly right. Well, I really appreciate y'all thinking of me, and this is my first podcast, so bear with me. If I go on too long, you can shut me up at any time. So jumping into from Bowling Green, Kentucky, and at a early age, was very entrepreneurial driven. So by the time that my feet could touch the ground on a lawnmower, I was doing that. And then if I wasn't doing that, I was at my dad's job sites helping clean up. And I, at an early age, really liked that, liked working, liked the financial freedom. Obviously, when I was a kid, I had a house I didn't have to pay for. I had a car. I had a driver. So financial freedom came early for me. And the fact that I was self-sufficient from age 12 to 18 without having any major bills. And so that allowed me at 17 to buy my first flip house. And as you can imagine, I had a lot of help with people around me to be able to do that. There's not a lot of 17-year-olds that would just know how to go buy one. So very fortunate in the household I grew up with, as you know, my dad being an operating partner for Keller Williams and the knowledge that brought. As most teenagers do in that 17, 18, 19-year-old range, I lost sight and became a little lazy. So I went back as I went forward, and I did not go to college, but I acted like I did, which was detrimental to the savings I had and to the work ethic I developed at a young age. Led to some poor decisions, and I was back starting at square one. And my dad said, "What are you going to do? You know, what do you want to do in life?" And I don't know. He said, "Well, you get your real estate license and we'll come figure it out from there." And that's the best thing that he ever had me do. So at 18 years old, 18 or 19, I got my real estate license and took off, started selling, had a great short career doing that. However, the emotional part of residential sales was not for me. And I'm a black and white guy. I'm on the investment side. And so I quickly figured out that's what I wanted to get into. But 19, 20 years old, not a lot of means at the time. So I enlisted help. I found people around me that had been there, had done that, and just would start showing up to their offices, buy them coffee, and would start learning. After selling for a year and a half, I'd saved up enough money to get back into investing and bought from a local bank. They had 7 houses that had just been turned back over to them. Actually, they had 50 houses that were turned over. These were the last 7 nobody wanted. And this banker, he said, "You know, nobody else wants these. We don't know what we're going to do with them. We'll give you the opportunity." And I said, "That's fine. That's all I need is the opportunity." So I had these 7 houses out of 50 that nobody wanted to touch. And within 8 months, I had flipped them all, made a good profit on all of those. And I was able to roll that in to my next big deal, which for me was a big deal. I did a real estate developer now, and this was my first deal that propelled me there. I got to build an 8-plex, and there was a lot of learning involved in that because everything looks easier from the outside looking in.
Yeah.
And I learned very quickly that being a real estate developer is a lot easier looking at people do it than actually doing it. And it still was a successful deal, but more successful than the financial earnings was the education that it allowed me to have.
Mm-hmm.
And I've been able to continue that growth pattern, which has gotten me to where I'm at now. And what I do now is I am a real estate developer that I raise money for deals on a GP LP basis. So my company, Cobblestone Capital, we are the general partner, and we are in charge of the success of that deal. And then we go and joint venture with limited partners that provide equity for those deals, and we put their money to work. And some of these partners are very opinionated. Some say nothing and say thanks for working for us and doing a good job. And this is where my passion lies. So it took me, I'm now 31. It took me 12 or 13 years to get here. Actually, I've been doing this for 4. So it took me 8 or 9 years to finally find my landing spot. And I couldn't be more happy with that. So jumping backwards, as I said, I didn't attend college, and a few, key points in my life were Keller Williams when I first got here. As y'all are aware, but not a lot are, the educational system that is in place is better, in my opinion, than any college I could have ever attended.
Absolutely.
And so it was, I've read y'all's book as well, with Gary's book. So there's all these tools there. And, the mistakes in my life looking back are really not, they were the biggest blessings I ever had that put me in those spots. Because if I had have gone and attended a normal university and done all these things, I really question where I'd be today. Now, I've always been a very motivated person, but I don't think that I'd be sitting in this chair talking to you or have the success I've had. And that built the base for all of my practices and all the bold laws, so to speak. And it's been an incredible journey, coming from no education and then having the Keller Williams there, and then self learning as much as possible to get to this point. And then the other thing is having mentors are the biggest thing outside of even education, in my opinion. Learning from people that have done the experiences, and both good mentors and bad mentors. Having bad mentors has been just as important to me as the good ones. And without those learning experiences, wouldn't be here today. And so I hope that summarizes a little bit of it. And
I have a couple of questions. For you. I assume we also believe the same way, that usually your greatest challenges become your greatest blessings if you look and learn the lessons in them. So I'm assuming that your early education that you got and poor decisions, were they somewhere around being over leveraged in properties? What are some of the key things that you learned from those very important and crucial mistakes that you got to have? And then what are you developing today? Is it single family? Is it multifamily? Go in a little more detail about both of those.
Absolutely. So the biggest mistakes that I've had that have been my biggest blessings. So first, at the early age, was losing focus. What we don't tend to on a daily basis won't take care of us either. And I stopped taking care of what I'd already built, and it quickly went away. And that lesson will stick with me until I die, that we have to take care of what takes care of us. And so I had to rebuild that. And then in rebuilding that, learned a lot of lessons along the way. And really, it was from the previous mistakes on how to purchase and how to underwrite a deal. Underwriting is one of the most undervalued tools, or under talked about tools, so to speak, when I talk to people that are wanting to get into this. It's a lost art, in my opinion, on how to truly underwrite a deal. And then to answer, what do I do now? What deals? 90% of what I do is self-storage, and it's development. We do not buy any existing operating facilities. We go find opportunities, and my team will get the entitlements done and the due diligence. So what does that mean? The entitlements and due diligence. So if we go find a piece of land in Toledo, Ohio, we will make sure that, one, we have to figure out, is that zoning there allowed for it? First question that we need to know. If it is, great. If not, we just need to know the path of doing it. And then in self-storage, unlike any other asset class, to kind of, if you build it, they will come. Self-storage, there's a lot of more that goes into that. So We have to look at drive patterns, the type of residents around there, what jobs are around there, the average income, how far we are to schools, so on and so forth. And so it takes us about 90 days on the front side to underwrite and figure out if this is a viable property. Once we've done that, we'll close and we'll buy the property. While we're buying the property, we start putting together all of the design for the deal. And in this, we even though we know what we're doing, and we would call ourselves somewhat experts, that we still enlist other professionals to validate what we do. Because we do have the privilege and opportunity for other people to trust us with their money. We believe that it's our obligation to ensure that what we're doing is correct. And so then we will go out to third-party management companies as well as feasibility companies, and they will validate the deal. After they have validated the deal, we will then go out for our fundraise, and we will decide that this is a $10 million job and a $3 million raise. And then we'll start selling off shares of those to individual investors. And once we have received all the money, the job goes vertical. We co-manage the build. So best way I can describe this is we act as a quality control agent for construction. We have on staff engineers, project managers, and myself, but we still go hire a third party, somebody to manage that build for us. And then we go by on a weekly basis and check in, and we do quality checks on time and cost. And then once it's built, we have a third party management company that will take over management, or at that time we will sell them. We've been fortunate in the past 5 deals that they've never made it to opening, that we have sold those at CO or there shortly after, and we've never had to operate. However, with financial, markets changing, interest rates changing, there's less buyers out there. Our next few jobs, we anticipate having to hold for 2 to 3 years and then selling on those, which actually fits well with what our financial plans are in the 5, 10, 15-year outlook. Cash flow is king. Cash flow is what we want to grow to. And at where we stand now, that's not what we're chasing. What we're chasing is a track record of success. And the more deals we can get in the rear view with a success record and track record, the larger we can grow our base and the more people that we can get involved with this.
And what kind of rate of return are you looking at on these?
So we are typically want to be a 2x multiplier on equity, and then IRR is north of 20. And we have the past 2 times been a 3x multiplier and about an IRR of 47. And the IRR is hard to look at because there's such a short time frame that we're only having money for 12, 18, right, 2 years. And so that really skews the IRR. When we look at these on a 5-year term, though, when we look at that, we're chasing a 20 IRR or north. However, as I've said, we've not made it to year 5 mark, but we would have outpaced that or been at pace for that.
Now you're talking about internal rate of return, right?
Yes. My apologies. Yeah, internal rate of return. Those are the 2 metrics that we're chasing: is IRR and equity multiple.
Hello, thank you for listening to the Everything Life and Financial Freedom podcast. For transcripts, resources, and more, visit the episode page on the podcast website at everythinglifeandfinancialfreedom.com. You can also download our Freedom Number worksheet. This worksheet will help you determine the amount of passive income you need to generate each year to sustain the lifestyle you have or the lifestyle you want when you no longer wish to work or simply want the freedom of your time and your money. So do you find the people that want to do it first, or do you go find the locations first? Which one do you do first?
We're constantly looking for deals every day, even if we don't have the bandwidth to do them. It's a practice that I've said I'll never not look for a deal every day. And that goes back to 13 years ago that I stopped taking care of the things that took care of me, and it bit me in the butt. So we are always on the lookout and underwriting deals. And for each deal we do, we'll have put pen to paper on about 100 other pieces of property. So very, very selective. And then once we find a deal, we make sure that it's worth sending out to investors. I learned that as well, to where I was anxious or overzealous, and I would get a deal and I'd want to share it so bad, and then I'd have to say, that's not a good deal. And I learned quickly that I didn't want to ever put something in front of somebody that I wasn't sure was a sure thing, because then they'd lose confidence in me.
You ever had one that wasn't a sure thing?
I would
You
say
lost
none of
money
them.
on?
None of them are sure things because of outside control, but they're 99% sure things. We're very diligent. And I'll say this is of the past 3 years. When I first started doing this, I didn't know what a sure thing looked like.
Yeah.
And I had to learn my way through that. So yeah, 4, 5, 6 years ago, when I was getting into development, I luckily did not have other people's money in the deals. And I got to learn a lot from my own mistakes and my own pocketbook. Now, since we have other people's funds, I've been able to learn from my previous mistakes. And of course, we still make mistakes job to job, but they're small mistakes at this point. They're not mistakes. They're going to cost our investors their return. What we're doing now is we're tightening the ship. How can it be a faster, smoother, better ran operation? And never will be perfect. There's always going to be something that we're doing. But just the quality of the investment and delivering the service to our clients, that's what our focus is on, just making that better every day.
So let's look at let's say you've got a $10 million investment deal and you're going to raise $3 million for your down payment and get financing on the rest of it. Is that typically what you're looking at?
That is exactly what we're looking at. And so my company, being the GP, we will go acquire the debt. So for this job would be $7 million, and we would be the only debt signers. And so even though we're not bringing much cash, if any, on a deal to deal basis, we are on the hook for 70% of the deal. And that is something that we 100% guarantee outside of the investors. One guy that
you personally guarantee the limited partners, you guaranteeing their money?
I guarantee their money as well, which is something that I started doing because an investor just plainly asked. And at first I said, well, no. And then I thought about it later and I said, well, if I'm going to ask him to do this, and I'm going to sell him on this deal, I better 100% be guaranteed in my mind and my heart that this deal will come to fruition. And so I started doing that because I feel like it's an obligation that I have, that I would not be standing behind a deal if I would not be 100% guaranteeing it to them and their return of their money back. However, as we grow, I'm sure my attorneys will make me stop doing that as we get into larger funds and we have to follow more general practices. But until that time, we will do that.
So is the deal made when you buy the land at a cheap enough price? Where's the critical point?
Absolutely. So what we do is a kind of going through levels of the underwriting. So I found a piece of property in, let's just say, Toledo, Ohio. First thing I do is I want to go check the local, the nearest competition, and I want to check it for quality, occupancy, and then their street rate. And so in storage, you have two rates. You have street rate and you have slash rate. And so the street rate is the walk-in rate, and it's the highest rate that you're going to get. Your slash rates and your web rates is like if you were to go online, you can get a discount, or if they're running any specials. So I check and see what they are on a per foot, and that'll let me know if it's worth pursuing any further, because I know what it costs to build. And if they're under rented in that market by 20%, even if there was an availability and say there was full occupancy, I could not go do that deal because they're not getting enough rent to offset what our cost would be. And so if we move past that, because we're chasing a debt yield and a cost yield at the first threshold. And so we have to say that we want to be able to build this at a 9% cost yield, which basically means if we had no debt, it would pay itself off at a 9% rate. The next steps that we look at after that get a little more deeper, but go into a lot of the demographics, and then figuring out the current traffic patterns are a big deal. Because if we can outposition a different storage facility, even though that there might not be a ton of availability of square footage in that area, however, month over month, the ABC storage down the road is getting 20 new clients a month. So there's a high turnover. We know if we were to go out position them and build a better product, that we would be able to get a lot of those clients that they're getting. And so, when I look at this, I learn something new every single time that we go look at a new facility. And a lot of these tricks and trades are not of my own, and I can't take credit for. There's a group that is out of close from y'all's market, in the Dallas market, that they used to be branded Move It Storage, and they were owned by NSA. I'm sure y'all probably seen a Move It Storage once or twice. So there was their president, Tim Springer, is become one of my dearest friends, and he's sat on the board for the Self Storage Association. And having somebody like him, to where he has been there, done that hundreds and hundreds of times, and has had the staff that they have learned more than I'll be able to learn on my own in a lifetime. And so Tim, I joke with him that he is my one of one board member. And so I have him review almost everything we do, and to get his seal of approval. However, I don't use their name because it's not a Move It deal. Tim, he just sold his company now. He started his own. It's called Avid Capital, but we still have the same relationship. And then I have other relationships that have really helped propel me, because it's daunting how much goes into a storage facility deal. Like I said before, it's just a lot easier on the outside looking in. And,
Sure.
You think it's, all right, they rent for this much, you can build it for this much, it's a good deal. And nothing could be further from the case on that with storage. It can blind you with the hidden details. And what you see is not what you get typically.
So one of the trends I'm seeing in the storage business is climate controlled units. Do you build those type?
100% climate control is most of what we're doing. We focus on conversions of old Kmart's or Kroger's or other large shopping centers is where I prefer to do deals. And my preference of doing those is for two reasons. In real estate, most of your contingency will be ate up in your dirt work and your foundation and building the main frame structure. When buying these conversions, we already have that done. So it can eliminate a lot of our uh-ohs, both in time and in money. And then the other one is the timing of being able to do these conversions, to where typically, it could take 10 to 12 months to build one, depending on the condition of this Kmart building. We could be in there in 4 to 6 months and be out for the market. However, we do ground up as well. And of those, it's all market driven. But most of everything we're seeing market wise is we're building 70% climate, 30% non-climate on the traditional drive up storage. Storage has evolved in the past 10 years more than it had since it was invented in the 70s. It has become more of a true retail use. Before it was, you had extra land, I'll put storage on it. Now, everyone that I talk to in the development world, there's a lot of the same parameters as far as site location as you would find for a Starbucks or for a fast food, wanting to be on the corner of Main and Main, which, and I'm sure you've noticed, self-storage as an asset class looks way nicer than it did 10 years ago from the quality of construction. Yeah. And that's been beneficial for us because that's all we've ever known. We don't have the learning curve of the way that we used to do it. And this is some of the things that my friends have all taught me is, look out for the next one, because just because we're here now and this is what the market says, is don't get blinded by this is all you know, this is all you'll do, because storage has always been an evolving market for its changes. And I'm very, very new into this business. So I hope that the current trend we're in stays for a little while, because I don't want to learn a new trick quite yet.
So I'm curious with all the minimalist stuff going on in the world and little houses and tiny things. I always laugh and say we're the only country in the world that needs houses for our stuff. But are you seeing over time, do you see the demand going up? Or do you see it trending down? Do you see any difference in the trend?
I still continue to see it go up, and it'll be still market to market base.
Yeah.
We, for good reason, we stay out of the top 40 MSAs. And it's because that we're a small fish, and that is a big pond when we go there. And so if we had competition next to us, they have the bankroll to have slash rates for 2, 3, 4 years and it not hurt their overhead, to where if they did that to one of my jobs, that put me in deep trouble. I don't have the bandwidth to pay the additional overhead. And so we stay in markets that are not as, what I would say is sexy to the eye, not as much boom and bust going on. And so we like to be in that under $1 million to over 250,000 population towns, which has provided a lot of stability as well. I don't want to be in the cities that have grown 10, 15% year over year, because they're attracting a lot of other developers in there. So a lot of the markets we're looking at we want to be above a 1% growth year over year. And typically we don't want it to be above a 5 or a 6% growth, because it's not hitting a lot of the other national players. And the second thing that we do is, one thing I learned early on is storage is a very open book asset. So there's really 5 or 6 companies that own most all the storages. And they do not have the boots on the ground to go get in front and start building these deals. So they need small developers like my team and others that can go do the developments, go get the entitlements done, and then build that per their specs. And so what we'll do is, we know if somebody wants to be in city XYZ, we'll try to figure out what does an ideal storage look like for them. What's the lighting package? What's this? What's that? And we'll build that in hopes that they'll buy it in year 1, 2, or 3 when it fits their needs. And we've had success doing that with U-Haul and a few other companies, but U-Haul being the largest.
Yeah. Wow, that's awesome. So go ahead.
Yeah, let me ask you a question so do you guys just raise 30% of the money, just the down payment money, and do you keep 70% of it yourself?
Yep. So on that, let's say a deal's $10 million total cost. And let me stop right there. In cost, unlike other asset classes, interest reserve is not a huge need. In storage, we put that in part of our budget, because it'll take us 14 or 16 months post construction to be stabilized at a 1-to-1 debt service ratio. So in that 10 million, that's all cost included. And we will raise $3 million from the investors, and they will have 25 to 30% of the deal. Plus, we pay them a 10% preferred return that's paid in arrears or upon when it stabilizes and cash flow hits. The other 70% is levered from a bank. Typically, we'll go into whatever city we're in, and we'll find a local lender, and they will do the 70 or 75% loan. Of that we have raised the carry until we see cash flow from the investors that pays for that and services that debt. And then once it cash flow first to the bank, and then all additional, there's a split between reserves in case we have to go backwards and we regress and how we're filling up. And then once we've met that reserve, it goes to the investors. And then also on sale, they're paid first.
So whenever let's say you built one for 10 million and you did it all, just like you said, with the $3 million raised and stuff on it, how much would that actually sell for in the open market in the first 1 to 3 years?
So on the CO market, which is certificate of occupancy, that is the most volatile, and you'll see changes month to month and quarter to quarter. Just last year we were selling stuff based on a pro forma 6.5 cap rate at CO, which is pretty crazy to think. It has no in-place income, and we're selling it based on year 3 pro forma at a 6.5 cap rate. Fast forward 8 months or 9 months to today, might be more like a 8.5. So pretty big change. But you go fast forward to year 3 or year 4, so storage also has, which all assets class do, but they're further apart than most asset classes. So you have physical occupancy and economical occupancy. And the way storage fills up is your physical occupancy goes up, you bump rates, physical comes down. So economic goes up, and you're just chasing the ladder up and back and forth like this. And so say that took 3.5 years to where both of those are at a 90% or higher. Both of those are within 2%. Market to market, these are still trading at six caps, 5 caps. If it's a bad market, a bad storage, that'll obviously reflect it. But we're still seeing great sales at those numbers. It's just there's a lot fewer buyers now. To whereas you might put one up for sale and you'll have 25 competing people. You might have 5 or 6 now, which has affected the value a little bit, but not tremendously, because a lot of these companies, they're making so much money that they have to go buy. Some of the companies currently, Prime is the largest privately held storage company. What they've done, because they're not being able to buy enough at a fast enough time, is they're actually financing developers. They'll go put 80 to 90% cash in a deal, and they have rights to buy it for its first 2 years. The developer would then put in either 10 or 20%, and then they're financing deals. Now, Extra Space Storage is doing similar things to where they're financing deals with the rights to buy, just because they have to keep their money at play.
Yeah, interesting market.
It's a very interesting market. And to answer your question on what we'd sell for, so if we were to build that one for 10 million, I would not let the certificate of occupancy value affect if I do that deal or not, because it's such a moving target. It could say that it might sell for 9 million, which obviously who wants to take $1 million loss, but we don't have to sell at CO. It's just a bonus if that was a good number, because the returns are higher the shorter we own it. But we're chasing, so if that was a $10 million deal, we would want the in-place income based on pro forma to be at 900,000. So making that a 9% yield. And then we would look at wanting to be able to trade that off at a 7% and still make 30%. So I'd have to do all that math real quick in my head. That probably put it somewhere in the $13.5 million.
Yeah.
That's what we'd be chasing.
That's awesome. So I have a couple of questions. Obviously nobody succeeds alone, right? And you mentioned mentors. So a couple of questions. One, we talk about how to get people in your life that is a mentor, and this guy that you talked about, Tim, that seems like a critical part of helping you and doing stuff like that. So did you start out searching for mentors? What made you do storage buildings instead of single family houses or apartments? And then how did the mentors come into play? Did you just go pick them and then figure out how to be valuable enough to them for them to open the door to a relationship?
Great questions. And so I actually did not want to do storage. I did not like it. So my uncle is a self-storage developer, and he was always complaining, jobs take forever, yada, yada, yada. And I wanted to stay in the residential world. An opportunity came in front of me about 5 years ago to lead a team in a development. And I said I would, and I immediately fell in love with the asset class because of how unique it is. And also, it's such a smaller world than residential. I instantly had connections to top 5 companies, to where in multifamily, that would have taken me a lot longer time to grow those relationships. And getting into those relationships is by just doing deals, and being that there's so few players out there. So I was doing a deal in Florida, and we had just broke ground on it. And Tim and his company were actually a competing offer. And this local guy in Florida did not want to sell to the big money guys, and so he chose to sell to us. And as soon after we purchased that, I'm getting a call from this Tim guy all the time, wanting to buy this, wanting to buy it, wanting to buy it. And so I first didn't like Tim very much. He was, he was kind of annoying. And we get to the end of the deal, and I finally sat down with Tim, and it was one of those relationships that instantly just took off. So he is I'm 31, he's 37, so in the same age bracket. All he does is storage, and me and him we're both nerds when it comes to real estate. We can both play golf, and so instantly became good friends. And it was one of the best friendships that I could ever have lucked into because of his vast knowledge. And then from there, he's introduced me to tons of other people. And one thing I would tell people when you're looking for a mentor is find whoever, because I guarantee who's doing it. You can learn good, bad, or indifferent from them. And I've had a lot of bad mentors, and they have been just as important to me as Tim.
I love it. So a couple final questions. Our podcast is really trying to encourage ordinary people that they can have an extraordinary life if they really just do some of the right things and they choose to have that, right? You don't have to be Warren Buffett or Bill Gates or Steve Jobs or any of those things. So what would be a little bit of advice if some of our listeners say, yes, I want to create a life that I love. I want some freedom. I want opportunities. What are a few tidbits of advice you would give someone who says, yes, I want that?
The biggest advice that I could give people, and I have people that, and I'm sure y'all have this as well, that see what you have, want what you have. And it goes back to the be, do, have of
Yeah.
I always tell them that you've got to get yourself into action, and breaking down people's fear barrier and the fear of failure is what I see in people in my life that's always stopping them, that they will not put themselves out there enough to give themselves a chance at an extraordinary life. So they stay on the sidelines wanting it, but not doing anything to have it. So what I would always tell people is get into action.
Mm-hmm.
You're going to make a mistake, but even if you plan for 10 years, you're going to make a mistake. So jump into action, get your hands dirty, make a mistake. Just don't make the same one twice. Continue to learn. And for the people that are in action, but stuck in the same old with not getting growth, mentors, that's when my life did this, find those people, talk to those people. You're going to meet a lot of people that don't want to talk to you, but it's up to you to continuously look for people that can help and will talk to you. But that comes back to fear as well, as being vulnerable. For me, that was the biggest step. 2 steps that I did is 1, getting into action, and 2, once I was in it, not to be afraid of what people thought of the dumb redneck from Kentucky that's in this storage game. 90% of the people I deal with have fancy degrees from the top firms, top universities, and they've had these long track records. And I was afraid of that for the longest time. And one of my mentors says, you don't need to be afraid with that. You need to lead with that. It's what separates you from all of it, as you are the dumb redneck from Kentucky that's having life. And he said that will stick with them more than the guy that has the 4 degrees from NYU, because he said there's a lot of those people. There's very few of yous.
Yeah, love that.
Yeah, you're a minority at 31 years old to have created what you've created, and you've got a big, bright future in front of you, Guy.
Yeah,
well, I appreciate it.
Proud of you.
That's awesome.
Well, I owe a lot to the KW family. Like I said, this is success is simple. You just got to get out there and do it.
Yeah, love it. Well, how can people reach out, find you if they've got they want to be part of that investor group? What's the avenue to vet them out and see if they qualify?
Absolutely. So my email is Zach, ZACH at ccbgky.com, and I'll do that again. So Zach, ZACH at CC as in Charlie, BG, Bravo Golf, KY, Kilo Yankee.com. And not only people that are interested in investing, I really enjoy talking to people that are wanting to do this. I learn as much talking to them and self-discovery as I think anybody'd ever learned from me. And so selfishly, I like for people to reach out, want to learn, because it challenges my brain and gets me thinking for what I can do and how I can help. So yeah, anybody that ever would want to pick my brain, you might not get what you want, but I think I'll get something out of it. So
Yeah, that's awesome. That's awesome.
Well, cahoots to your mom and dad. They've created quite a young man.
Yes.
I'll tell them that
I'm sure it's your mom. I'm sure it had to be yeah, I'm sure it's your mom. I've met her. I think it's your mom. I'm going to give credit to.
Yeah, I would. That's who I'd give it to.
That's awesome. Well, Zach, thank you. We appreciate you being willing to share and help other people who, maybe are sitting on the fence and, they really have the desire to create freedom and opportunities for themselves. We just want to, bring on people like you that shows a path for people to follow or to look into, to realize that it really is. It's about just making a decision and taking action. So thank you. Appreciate that. And Jim, any final thoughts?
No, just great information today.
Yeah.
That's awesome. And you're kind of the avatar for Linda and I. I
Yeah.
mean, you're the kind of folks that we like to see that's nailing it big time, and you've taken a chance.
We learned a lot today.
Yeah,
we've never looked
cool.
We've never looked into storage buildings. So thank you. We learned something today too, though. This is why we do this podcast.
Right. So absolutely. And anytime, like I said, I love talking real estate on a deeper level. So anytime that you want to dive in, I'm all there for it.
All right.
Awesome.
Well, tell your dad hello for us.
Yes. Well, if we can ever help you out, let us know.
Absolutely. And when y'all are in our area, I'd love to sit down and talk with y'all.
Yeah, we'd love to do the same. We'll do that.
Thank you so much.
Thanks, Zach. See ya.
Thanks. Bye.
Okay.
Thanks for listening today. If you haven't already, please subscribe and share this podcast with others. The greatest compliment you can give us is to leave a 5-star review. And please feel free to reach out to us at info@lindamckissick.com. We would love to hear from you about any ideas, topics, or guests to include on our podcast. So see you next time.